Hey guys, what's up? This is Neo, your host for Star Invest. Sorry today that my eyes do not look that good, so I have to stay away from the camera. SpaceX is worth less than half of its IPO target. Morningstar say, people, what are IPOs? Initial public offerings. Companies want to gather capital for their expansion for future growth, and going public is one way to do that. Other ways is such as borrowing, of course, or getting private funding as funding rounds. As we have probably heard about funding round A, round B, round C, and SpaceX has had some funding rounds before, and it has been privately valued at around 400 billion before or 600 billions before, but now the company is trying to absorb as much enthusiasm from the public market as possible, and they will be staging roadshows saying how good the company is and how great their visions is for the futures of space missions. And then once the potential investor buys their vision and their um, you know projected strong growth for the future, then investors are so hyped, are so enthusiastic that they are willing to open their wallet and buy the IPO shares of SpaceX at much higher prices. That is what IPOs are for. IPOs, initial public offerings, are not designed to get investor wealthy, at least not immediately. It is for companies to go to get new fresh capitals from any interest investors. They have already gained the support of private investors. Of course, their next step is going to public to get as much money as possible to fund their future growth. Now, future growth, for example, if you bought into IPO of Amazon, you have to spend the last 30 something years to wait for it to become what it is today. Just as an example. So it is not a given. It is not a given that you will see short-term returns, short-term meaningful returns. No, as an investor, you have to understand each company go IPO to fund their future growth because they have a vision and because they see that there are something the current economy or the current technology or the current markets lack. And they see bringing something new to the market will benefit the entire humankind, mostly, more or less, So people, you have to understand when I hear some people in Reddit, they are airing their grievances. Oh, I bought this IPO last year and now it's down 50%, now down 90%, which is not impossible. We have seen IPO stocks such as um, some of the battery, solid state batteries such as QuantumScape, sold up to $100+ per share, and then last year was down to $5 per share, right? So IPO is to get as much hype as possible so that the retail investors and also institutional investors are pretty much at a very excited stage, and so that they open up their wallets without thinking twice. That is the purpose. And then the money can get as much capital as possible to fund their future growth. Okay, now let's move on to, so be careful with this IPO of SpaceX. Okay, I would personally wait for at least half a year to 2 years to see if their future quarterly financial report will show any consistency in their profit making, or even if they are not making profit, whether they are working towards making profits in the future. You as an investor, that's your money. You have to put your money in very good way to grow them, because If you buy something at IPO prices and it goes down 50%, what does it mean? It means that your money has gone down 50% and you have to see it grow 100% to just break even. If it goes down 75%, then your money has to go up 400% in order to break even. You understand? So this is huge. So that's why I don't recommend people to buy IPO, especially at a time when there are so many stocks that are flying sky high because of the AI build out. For example, Micron. Let's look at Micron. OMG, Micron. OMG. This is our third biggest position now. It was just 8th biggest. But because of its continuous surge in stock prices, it becomes number 3 in our portfolio. OMG, and wow, this past 6 months, if you only bought it this past 6 months, not even, just 3 months, from 350 and now it's 3x already, 3x people. So you don't have to buy Tesla, you don't have to buy SpaceX to grow your money. Now Tesla is different. I bought Tesla in 2014. I did not buy it at IPO. I bought it in 2014. At that time, no analyst say a good thing about Tesla. So meaning it was largely undiscovered. Okay? You want to buy a company when it is undiscovered. Just like Amazon, if you bought it before 2008, it was mostly undiscovered. Most of the analysts were saying what? Oh, the company consistently was losing money, so it is not worth investing in, and it may go bankrupt anytime. That was the short seller and also the analysts saying about, Amazon at that time. And they also talk about, oh, Amazon was just an online bookstore. So you want to buy a company when no one believes in it, when nobody sees its future, and when at a time when even internet connection was low. So how would you expect that people would spend a lot of time browsing online and buy something before even they can get a chance to touch it? There was Amazon, right? If 20 years ago you have the foresight and insight to see that one day people will just use their smartphone to buy stuff without even visiting a store or touching it, then you would have bought tons of Amazon shares, right? But now what? Everybody say, oh, I buy Amazon. Oh, I buy Amazon. You hear your coworker saying that is because of what? Because they are following the crowd. It's not because they have something special that they can see a special future of the company which has not been discovered yet, right? So if you want to get the maximum returns for your money for the medium and long term, then you are not supposed to go look for company which has been discovered. You're supposed to look for companies which have not been discovered yet. For example, when I bought Micron in April, right? That was close to $400 already. But guess what? From my understanding, when you have Nvidia and AMD shooting sky high, what is the difference between memories and the AI accelerators chips? There's basically no difference. If you have AI accelerated chips in the wafer, but with no memories, you still have no AI data center. Why? Because you need memories to work, and you need cooling systems to work, and you need 5G, 6G, fiber optics communication system for all the AI modules and clusters to work together or separately. So if the analysts were all along saying, oh, memory chips are cynical, oh, we don't see a good future for them, it's just a sudden surge in demand by AI data center build out, and then it will be going down again next year. All those analysts, what are they talking about? We are talking about decades of building out a lot of data centers plus edge AI application, and then physical AI application, and then industrial automation AI applications, and then space mission AI applications. Can you think about the amount of memories that we need going forward? Whatever kind of memories, we all need them. Without them, the brains won't function. The AI brains won't function. No matter how many NVIDIA chip, no matter how many AMD chips you have, it just won't function. So the demands of Micron's chip is so sky high that, now let me back up a little bit, a few steps. They make HBMs, high bandwidth memories. What is different between the regular DRAM, direct random access memory, is that the company stack up 3 or 4 of these memory chips on top of each other, just like condominium that stack up the units one on top of another. So instead of 1 unit, you have 4 units now. So for the same amount of space, you just don't host 1 set of data, you hold 4 sets of data. It's like a condominium with 4 stories. You don't just house 1 household, you have 4 households now, right? For the same amounts of real estate. So that is the purpose, to pack more data per unit areas in the wafer, because the demand for this AI compute is so huge. They process huge amount of data and at a very fast way, and need to be consistent, low latency, consume as little energy as possible, and be very quantum safe. So these chips are difficult, very difficult to manufacture. And even if Micron is saying, the CEO is saying that they are making new fabs to make more chips, but the new fabs won't come online until 3 to 5 years later. This is not same thing as building up a condominium in 8 months to a year. No, these fabs are the cleanest place on earth, are the safest place on earth, and cannot be attacked by cyber criminals. So you're talking about something that is top-notch national security level area. So it is not something that you build on a daily basis. No, people. So when everything is said and done, and when the new fab is ready to build, it still takes time to scale up the production. So we are talking about years away. So what about these coming 3 to 5 years? What happened is Micron CEO sees such a big demand from all the hyperscalers that if each of the hyperscalers want certain supplies of their HBM chips, they have to sign a multi-year contract, at least 5 years, to lock in the price. Otherwise, no luck, no more luck. Once someone else lock in the price and the supply, you are totally lost. If you lose out at this rate, this AI build out rate, what does that mean? All the consumer flock to your competitor platform. OMG. No hyperscaler can afford to lose their market share. Trust me. And they're all going after AI build out, quantum computing, space AI data center when we run out of space eventually on Earth, for clean energy, and with so many cities now increasingly saying no to new data center building in the areas. My goodness. So it will push us everything. Communication, AI data center build out all to space. And space is the next big thing. But if you look at space, they still need MRAM, that is magnetic resistive random access memory, and Micron, even though they are not making it now. But it doesn't mean that Micron cannot acquire another company or pay royalty and make those chips, right? So this build out is multi-decade, and the growth for Micron is not done yet. Yes, in the past they are cynical, but now no, they are strategic infrastructure play for the entire AI build out. So anyway, let's go to the next one, which is OMG SanDisk. Same thing, from last year's $40 or $35 after IPO, and now it's 1,700, and Micron is going to 2,000. I'm telling you, people. I mean, I'm just telling, but you do not follow me without doing your own due diligence. All these are not financial advice. And people, I would love to share information with you and also hear from your feedback, because some of you have wonderful feedback. I really love it. Okay, Nokia. Nokia is another wonderful one, people. And they are doing back-end communication infrastructure. They have a Bell Labs. Bell Labs have given rise to 9 Nobel Prizes. And it's amazing. They have inventions such as fiber optics, and then transistors, and Unix system. It's crazy, to name just a few. And when I bought it, it was $7, $8, and it was around here, March, April. And then now it's just consistently, it's like a straight line. And I just had a new video about Nokia. If you guys are interested in knowing more about this company, yeah, go ahead and take a look at that one. I will appreciate you guys so much. And then the next one, oh, AMD, my God. Last year, I was talking to my coworker and uncle. It was under $100 per share. Under $100 per share last year. Oh my gosh. That was March here. So 89. I bought it at 87, 89. And now it's over 500. OMG. Last April, most of the analysts, remember we talked about analysts? Most analysts were saying, oh, this is the worst year to invest in stock. It will be the worst year in stock market history. Guess what? I kept on saying to my uncles and friends, hey, this is the best time to buy when there are maximum fear. And it doesn't make sense that the underlying consumer growth and optimism was still very strong. But then the analysts were saying, oh, because of tariff this, tariff that, our economy is doomed. We will see the biggest decline in Dow Jones index, in Nasdaq index, in S&P 500, blah, 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 left and right. All those morons. All those morons, where are they now? Oh, they are hiding their money in money markets. Oh, man, 7.7 trillion USD currently are parked at money market funds. And this year, and March of this year, what did this analyst say? March of this year, OMG, and AMD was just under 200, and a hair under 200, and now it's already 500 plus. Even if you bought at the bottom this year at March. Similarly, March of this year and March of last year were the bottom of the market, and that was the time when maximum fear showed up. And a lot of the analysts were saying, oh, we are doomed, we have AI bubble, and this is abstract. We are just creating circular revenue for the AI companies, and it's just a big air balloon getting ever bigger and bigger. Oh my God, those analysts, those morons. And if you have been listening to those so-called analysts, I'm trying to be polite, and lately, and you would have been missing quite a bit for the current AI run-up for a lot of the AI-related companies. And man, look at our portfolio. These are all our portfolio, our company in the portfolio. Micron, SanDisk, Nokia, Advanced Micro Devices, Intel. We bought at 80. Wow, my God, what's up, Intel? And now it's 107 after surging to 130 earlier. It's good because you want it to consolidate in the short term. So whoever want to sell, let them sell. Then the current long-term holder like me and you and new interest investor will continue to buy it up and hold it for longer term. Then it will come back up again. Nvidia also has been seeing some downward pressure after the last income statement came out. And yeah, some people want to just sell and hold their profit. Short-term traders, just let them sell, and the long-term holders, investors, and new investors will buy and hold, and it will go back up again. Just like Vertiv. Oh, the cooling system and power system for AI data center built out. Let me show you what I just said. So after their last earning report, right? So people took profits and went from 380 to 310 people, losing $70 per share. And then I am here for long term. You see how straight this line is? It will just continue to go up. The AI momentum is not ending here. No, it is decades built out. So it will be even higher before you know it. I can see that it is approaching 1,000 by year end. If not, maybe next year. Wow, if by this year end will be 3x again, another stock in our portfolio. Oh my goodness, people. This AI build out, how much have you missed, right? So if you listen to the analysts, they are so pessimistic. You would have missed almost all of these. Oh my God, a lot of these are 500x, 500% return already. In the case of SanDisk, it is 4,000% return, people. 4,000. Let's see after IPO. See, it is as low as 33.13, $33. You see that? And now it's almost 50x, almost 50x, 5,000% return, almost. See, you would have missed a lot if you listen to analysts. Oh, this is cynical. Oh my God, this and that. And then we have Navitas Edge AI semiconductor chips. They will be doing wonderful, especially when robots will be rolling out soon. Oh my goodness. And then no matter what robot you buy, you still need some of their chips. And then applied optoelectronics. Applied optoelectronics is making fiber optics networking. They are selling those networking equipment, and they are seeing a lot of exceptional demands for any categories of their communication equipment for AI data center build out. And then Navius is crazy. Navius is another huge one that we score. And let's see, we have it from $58.60 per share. It was like this here. Yeah, around here. 50 something. Yeah, around here. So it would be last year, and then now it's just 261, another big score for our portfolio. That's why our portfolio has been able to grow 4x for the last 12 or 13 or 14 months. Yeah, I don't even remember when I start to have that second portfolio. Iron is like Napiers and form factor. My God, any semiconductor chips, right? Any memory semiconductor chips, any AI semiconductor chips, any energy semiconductor chips, they need to be tested. They need to be tested before they are put into module and clusters. Those AI data center cannot afford to have any downtimes. So the AI clusters and then AI modules and each wafer has to be tested. And these testing labs just see unprecedented demand for testing. They just cannot even keep up. And look at this. Some morons try to offload their shares. They have no idea. They would be missing. Look at that. It's not a straight line. It is an exponential line. It is like a moon shape. It's like a crescent moon shape. It's not even a straight line. It is curving up. It's so crazy. The demand is so crazy. Some people want to take profit here. Okay, just let them. Like we said, just let them. And then I am here for the long term, and some other new investor will see the opportunity, or someone's uploading, they will be uploading. Yay! So, okay, people. This one, just our latest edition. Oh, 313. My God, it was just 355 this morning. Oh, this is our latest edition. I added it last Friday. I don't know what happened today. I actually was supposed to work today, but my eyes are having problems, so I don't want to show my eyes today. And but my voice is still working amazingly. So wow, 313. It wasn't long ago. It was under 150. When was it? March? Maybe March. Yeah, because I learned this company last year, but it wasn't until May I seriously look at this one. Wow, it was only 80 in March. Imagine, people, and no analyst talk about this company. See, if you follow analysts, they are saying left and right, oh, this AI is a bubble. Oh, this is the worst time to buy stock in America, blah, blah, blah. One thing I do not like is a lot of analysts, they take into their bias for political views. If you are biased with political views, that is one thing that spell disaster. You want to be politically neutral when it comes to investment. You have to look at each company, look at what sector they are, look at the current trend of the entire market, look at where the investments are coming from, and whether they are sustainable, and then look at the future growth of the entire sector that company is growing into. So every star just line up for this AI build out. These are all core AI infrastructure companies. So all stars line up for them. And those analysts just miss it entirely. It is like someone looking for the train that go to let's say, okay, let's say you are in an airport. You are trying to find your flight from New York to Los Angeles, for example. The gate is right in front of you, is saying, oh, this is the flight, this is the gate for the flight to Los Angeles. How can you miss out right in something that is right in front of you? How can you be even an analyst at all, right? So well, to each his home. So it depends on which channel, how you get your information from. And for me, I'm just doing all these due diligence myself, and I look at industrial trends and what the current market lacks. For example, if you look at banking industry, right, the whole banking infrastructure is century old. It's like our grid, GRID, our energy grid for United States is century old. So the banking system infrastructure and the grid infrastructure both need modernization. SoFi is the infrastructure that modernized the entire banking industry. Although it's trying to do it by itself, so it's doing it slowly. So, and a lot of investors are just not patient enough to wait for it. Obviously, they have sold already, which is wonderful. Whoever want to sell, just sell, please. Thank you. And then, just like all these Marvel's company before, you think they were flying high? No, no one were looking at them. Look, it's basically flat for the last so many years, right? Right? It's basically flat for the entire life of the company until recently, right? So now they are being re-rated because whatever they sell suddenly are in high demand for the AI infrastructure build out. Okay, people, let's stop at here and we will talk more about different stocks, and let's see. Yeah, Marvel is gonna be huge. Oh, you know what? Before I go, Marvel CEO say that he sees exceptional. This is his word. Exceptionally strong demand of their equipment and technology and their semiconductors. They expect growth to continue to accelerate. Okay, people, these are his word, not my word. Okay, so and last quarter, Marvell saw 28% year-over-year revenue growth, and this coming quarters should be 35%. And I believe by end of this year or early next year, I won't be surprised to see over 50% year-over-year growth. People, this is one of the companies that we should have for this AI data center build out or data infrastructure build out, along with memories and other chip AI accelerators companies such as AMD, Intel, NVIDIA. Excuse me. And then you have AI data centers such as Navius and Iron. People, wow, this is so far an amazing year again, and I believe it will continue to be. But be advised, we will have a new Federal Reserve Bank chairperson coming to his first meeting soon. Sometimes the stock market like to test the new Federal Reserve Bank chairperson, so the market may see a small correction, okay, between now and the first meeting of this new chairperson of the Federal Reserve Bank. There could be a small correction, so just be aware of that. And happy investing, people, and until next time, stay healthy. Thank you for watching. Please like and subscribe.